You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Whenever the miners do not lead the metal, I'm always in caution mode. I don't believe in the move in gold is quite ready. You're going to get another significant pullback in it, or even correction, I should say, and then you'll get a great lifetime buying opportunity. I mean, like a 1999, 2000 opportunity to own gold.
Within the next few years, you would expect that to happen?
Absolutely. I would say, 18 months to 24 months, gold sets up as one of the best trades you'll ever have.
Thank you for tuning into Mining Stock Education. I'm Bill Powers, and in today's show, we're going to be getting an update from master trader Nick Santiago of MiningStockEducation.com. Nick, welcome back onto the show for the monthly check-in. We're looking at September, October, sometime that can be treacherous for the general equities. Do you have any worries about a possible steep sell-off in the general equities this fall?
Oh, I definitely do. I think this is showtime. Historically speaking, September and October are very, very turbulent and tough periods for the markets. You got to remember, this market has basically gone up in a straight line almost each and every month. Every sell-off, including a sell-off that we saw this week, seems to get reversed with buyers. So it's buy the dip mentality all the way through and through this whole entire year. So I definitely think you got to be careful. There's also lots of chatter that there'll be a Fed tapering going on. I'm not so sure I buy into that, but just the fact that if the Fed is starting to think about curtailing their $120 billion a month asset purchases, that could, ruffle some feathers in the stock market. So I definitely think you have to be careful in September and October coming up. And I think August is still a pretty turbulent month in and of itself.
So what we saw in the debacle in Afghanistan, that can cause to lack of faith in the U.S. government. How do you see geopolitical events like that affecting the markets relative to Fed policy?
Well, historically speaking, when a president's approval rating goes down, it usually does affect the market at some point. I don't think this Afghanistan debacle is going to cause the markets to really crater at the moment. But I think it can really have a big effect in several weeks from now. And why I say that is simply because the market right now is just really concerned about the Fed's presence. Is the Fed going to stay there? Is there going to be continued Federal Reserve put by Jay Powell in place? And I think if you get more problems coming out of Afghanistan, obviously, we could see this leadership is really not the greatest leadership. You're seeing this president really has a tough time handling questions, let alone policy, right? So that's going to come in eventually. I don't think it's going to happen right away. I do think, though, several weeks from now, a month or so from now, that there could be big problems, big ramifications from this Afghan, what do we call it? A retreat? I don't even know what we call it.
So Nick, at the beginning of the year, you told us volatility would be the best trade. So I got to bring this up with you every couple months. I looked at VXX before this call, started the year around 70. Now it's at 28. So could volatility still be a good play this fall if there is a decline in the stock market? I
think volatility can be a great play. I would sit tight for now. But even this week, we saw the actual VIX, which is what I gauge on. I don't really gauge it, the VXX. But we've had two encounters where it went over 20 this week. So we just yesterday went, I believe, to 24 and change. Whenever you come down in that pattern and you just making a bunch of lower highs, eventually, when the real breakout takes place, you could see an enormous move to the upside. The other thing I'd like to point out about the market quickly is that if you look at these market internals, they're absolutely awful. We see the market indexes continue to go up, but we look at an advanced decline line, which is often down 2-to-1. We look at new highs versus new lows. We're making now new lows this whole week versus more new lows than new highs on the 52-week schedule. So, these are market internals. There's only so long you can get the thin leadership to continue to keep things stable. Right now, you have leadership in stocks like Microsoft. You have leadership in stocks like Apple, Nvidia. But it's really just a small handful of equities. So when these equities go parabolic and they start to come down, What has happened is the money has shifted to another sector. And that seems to be what goes on in this market. You have bear markets within a bull market, and it's a game of hot potato. But eventually, the big money says this isn't going to continue, and then you start to sell. But right now, the Fed has won the game. I have to tip my cap to the Fed, and I have to say, hey, the $120 billion a month of asset purchasing, interest rates at zero on the Fed funds rate, that has done the trick. And so far, they've won.
Well, they win until they lose, though, right? So what are the telltale signs of when they start to lose and we see VIX and gold take off?
Well, gold has been a great indicator for us because gold has been acting pretty poorly. And it's gone down really since the July options X. And that was a quadruple witching week. And I saw gold really tumble on volume. And the last time I think I did the program with you, I said, I'm not really in love with gold, especially not the gold miners. And they've gone significantly lower since then. So I think gold right now is ultimately going to set up as the greatest inflationary trade we've ever seen, but it's going to take some time. I think right now, if we get a pop in gold, you'll see, a move up maybe to the high 1800s or maybe somewhere in there, but I don't see gold breaking out right now. But what I do think is going to happen, you're going to have bond yields fall one more time, which they're slipping now, and then they're going to take off to the upside, and they're going to scream higher. And that probably, higher yields usually affect gold prices, keep them down. So I think we're going to see yields start to take off again. I don't know if it's going to be, how soon it will happen, but I really think this is the last dip we're going to get in yields, and then yields take off to the upside. And that probably keeps gold a little bit suppressed for now.
So when do you expect gold to make its move, though? I mean, is it this year or are you putting it off till next year?
No, I would probably put it off to next year or even a little bit down the road. For me, it's always about the numbers. And when we get into them, we land into those numbers, then I'll be looking for that trade. Not to say you can't get short-term trades or bounces, like you're getting a little bit of a bounce in gold now. Gold is holding up. Gold miners, though, are really not acting very well. So whenever the miners do not lead the metal, I'm always in caution mode. I don't believe in the move in gold is quite ready. You're going to get another significant pullback in it, or even correction, I should say, and then you'll get a great lifetime buying opportunity. I mean, like a 1999, 2000 opportunity to own gold.
Within the next few years, you would expect that to happen?
Absolutely. I would say, 18 months to 24 months, gold sets up as one of the best trades you'll ever have.
Okay.
And think about it, though. Gold is real money. So, here we are, printing all of this money. The Fed's balance sheet is, I don't even know how high it is now. It's enormous. The debt, U.S. debt is now approaching 30 trillion. If they push through another $5 trillion in debt like they're thinking, we're at 35 trillion. Who in their right mind outside of the Federal Reserve will own a U.S. Treasury? Nobody. So yields have nowhere to go but go up, and they'll go up significantly.
Arcana Silver is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven and probable silver reserves grading nearly 37 ounces per ton silver, with all-in sustaining production costs of only $8 per ounce of silver. The mine is fully funded and permitted with infrastructure already in place, and has announced production will commence in 2021. Achieving successful production should result in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. Nick, since you just laid out your 18-month to 2-year forecast for gold and the miners, just remind listeners how you played gold this year, because you had some accurate calls.
Yeah, so this year I told everybody that gold was going to drop, and I pretty much picked it off. I got the March lows, and it wasn't an easy trade because it had a bounce, and then it came back and did a retest. And I said, hey, this is a gift. They're giving you a second chance here. And gold took off from there. So we did really, really well on several gold plays. I had numerous gold plays in there. And then, it really stopped around that options expiration in June. I thought gold would actually go a bit higher. I wasn't expecting, breakouts to new all-time highs, although I did think there could be a chance of that. But now the chart pattern's not the same. So I've tracked gold throughout my career pretty well. I've done pretty well in it, in silver and the miners. There's times when the charts tell you to turn, you as a trader, you got to make that adjustment and turn with it. You can't always stick to the playbook that you originally had. Sometimes, those plays you got to scratch out and say, hey, I got to go the other way with it now. But for me, I think gold has one more dip, and a pretty significant one at that, after this little minor up move. And then you'll get another great opportunity, much lower price too.
Oil's been sliding downward for 7 straight days. You see that continuing? We're at $62 a barrel.
Yeah, I do think oil can continue a little bit lower. You're probably a little bit oversold now. So we may see some more upticking. Geopolitical events can also affect oil. I was recently short crude. I made some money. I wish I didn't get out of it, or I wish I would have put the position back on. But right now, when you look at crude oil, we were United States was an energy independent. And here we are, begging OPEC to print to pump more crude. So it's funny how this all works out. But for me, it's about the charts, and I still think crude probably can settle out around the mid-50s. I don't think it goes much lower than that.
Are you shorting anything right now?
I have a little short on right now in the S&P 500, more of a hedge than anything. But I think ultimately it's going to be a longer term play for me, and I'm basically flat on that. And I own the dollar. I've owned the U.S. dollar now for several months, and that's done well for me. I think I'm up about 8% on that. So. Those are the only 2 plays that I have that are betting against the market, so to speak. Other than that, I have longs out there.
And what's your best trade you made in the last 30 days since we last spoke?
I've had a few good options plays out there recently. But I have to say the dollar play for me is the best one, because as the markets came under turbulence, people don't understand, if the U.S. markets fall, the dollar is going to go up, because the markets only go up when the dollar falls. So I pride myself on that trade. I kind of like having that, where everybody, is so anti-dollar. I said, no, this is the time to get in. And it's long dollar, short euro. But I think that's the play I'm most proud about, at least for now.
Before Biden was elected, you said if he is, you're going to sell everything. Have you kind of rethought that philosophy now?
No, not at all. I think you just got to trade the markets until you get the sell signal, though. But this has been probably the most cautious year I've ever traded. I mean, in the last, probably since 08. I mean, 08, I had a lot of shorts on board, so that was good. But this year, really, I have not over positioned myself. I've traded, very, very cautiously this year, because even though the indexes have moved higher and it looks like things are so wonderful, there have been bear markets in so many different sectors and industry groups. And, that's what people don't understand, is that, maybe we didn't have a collapse in the indexes, but what we did have is bear markets throughout so many different areas, whether it's the SPACs, whether it's the small caps, and now you're seeing the industrials roll over, like copper stocks and things like that. So it's a trader's market, and you got to be very, very careful this year. I called it the year of trading dangerously. I knew already this was going to be that kind of grinded out year. It's just the way it is. The 1 year of a decade is very, very tough. It always is. It's not a trendy market. It's where you have a lot of chop, and you got to be able to navigate through that.
Excellent. And last question, what have your subscribers been asking you the most in the last 30 days?
They're asking me, when is the top going to be in? That's pretty much the question, because people see these ugly internals, as I was talking about before, where the advanced decline line is so terrible. New lows, 52-week lows are outpacing new 52-week highs. The leadership is down to nothing. I mean, when you look at the groups of stocks that are out there, the leadership is so small now. Those are all indications that the market is going to top. But like everything, you get these little pullbacks, the last 2 or 3 days, they look terrific, like the market's going to crater, and then you get a big rally, a short squeeze. So you could make a case that since 2009, every rally that we've seen has been a short squeeze. So I tell them right now, be patient, and the market has to give you more indications. And when it does that, then we'll trade it like it's a final top. But I do think that 2021 has been a challenging year, especially for me. And I've been doing this for a long time. I'll be the first to admit it. But, if you navigate through it, you still make some money. And more importantly, don't try not to lose money in this environment. That's the key.
Now you sound like Warren Buffett here, Nick.
Well, there's a reason why that guy is the second or third richest man, right? So, you got to protect yourself and, don't over position yourself. But you'll know when this market tops. It gives you a pretty good indication when it happens.
So even though you haven't been so right on volatility yet, you're still up significantly on the year.
Yeah, it's not my greatest year. It's not like it was last year. Last year I was, crushing it. This year is more challenging, right? So, but positive across the board. And what you try to do is you just try to navigate and take the best setups. What I've done now, I've kind of switched my strategy. I just really take trades that I think are going to work out immediately. I'm no longer looking far out. I'm staying shorter term. And if I have to take that quick profit, 4 or 5%, I got to take it off the board. That's fine. And then I'll go find the next one. And I think that's how you have to adapt and change. As before, I would hold something and I'd sell half and I'd let the rest run for a much bigger gain. But these days, we're not getting those second half runs. The market is just money's going from one industry group to another industry group to another industry group, sector to sector. They're playing a game of hot potato. And, until that changes, we got to play that game with them.
Nick, that's good advice. And especially for YouTube listeners, you can look behind Nick's right shoulder and the screens are red. There's multiple screens behind Nick for audio only listeners, and those screens are red. So as you were talking, I was like, that's good advice.
Any market that you get into, you always have to just follow the charts. And that's why I use them. Charts will tell you the trend is your friend, except at the end. And if there's no trend, then you got to just limit your activity. Doesn't mean you can't trade or find a good trade. Just limit your activity. The problem with a lot of young traders and newer traders is that they've only dealt with a bull market. They've only experienced a one track or one way market. It's going, from the lower left to the upper right. But the truth of the matter is markets don't always do that. You have the Federal Reserve in there and they are printing a lot of money. The European Central Bank, they are printing just as much money. The Bank of Japan, Australian Central Bank. I mean, it's unprecedented, the amount of cash that is flooding the system. When they retreat that cash, then, the system's not going to be as robust as it has been. And, you got a lot of Robinhood traders out there. You got a lot of people that are new to this business. They only know that one-way market, but markets are not always going to go up. And that's something people will find out.
We'll conclude with that advice. Nick's website, again, is inthemoneystocks.com. You can go over there to learn more about Nick's options and trading services. And we'll be touching base with Nick again in 30 days. So thanks for coming on today's show.
Thank you for having me, Bill. Thank you.